Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for December 18th, 2022. First of all, I'd like to say happy holidays. And I just want to mention that next weekend is the Christmas holiday, which I do celebrate. So we will not have a week ahead video next weekend because I'll be waiting for Santa patiently at my house and for him to deliver us presents. But I just want to let you all know that next weekend we will be celebrating the Christmas holiday, so we will not have this show. But we'll be back in 2 weeks, so don't worry about that. For those of you that don't celebrate the Christmas holiday, happy holidays to you, and whatever holiday you are celebrating. I hope you enjoy a safe and happy holiday season. Okay, with that being said, let me get into this today's video. We're going to discuss, obviously, what had happened last week, but more importantly, I'm going to paint you a picture today on how that makes the market look going into next week. Now, next week is a pretty important week because liquidity is going to dry up. We still have a central bank ahead, and we have some key important data coming out next week as well. So we need to discuss all of this and more. But before I do that, I just want to say, if you haven't tried out Forex Analytics, get yourself a holiday gift. It's only $1 for 10 days to try it out. That's not actually what I wanted to press. I wanted to press right here. It's $1 for 10 days. And then, after that, it's $189 a month. But you can try it out. Make sure you download the mobile app. This way you get all the analysis that you see here that we do here on Forex Analytics. You get the private shows that we do for the Forex Analytics community. You get the live squawk feed. You get the data flash that just shows you when data is coming out immediately. You get that as well. You get all the analysis from macro to candlestick to basic technical analysis to harmonic to Elliott wave analysis for 30 different instruments. And you get to be inside of our community where we have probably one of the most robust trading communities around, where we discuss, the markets. We post charts. We post what trades that we're in. You get, what we're doing, buying, selling, this and that and the other thing, whether it's myself or other traders. You have, news and research. You have even a World Cup room, which is going to be hopping tomorrow for the finals. But after that, probably won't be anybody there. But we have all these different chat rooms for you guys and gals to talk or to be in. And so, there's a lot to Forex Analytics. So make sure you give yourself a treat this holiday and get involved in our community. Now, I'm going to go through the live charts, and I'm going to talk about everything let's talk about like last week. Well, we had central banks meeting all over the place, and the markets didn't like what the Fed had to say. And then following the ECB and Bank of England, we saw a big rally in the euro because the ECB was much more hawkish than the market expected, and that weighed on the euro currencies. But I want to show you what actually happened with the euro pair itself. So what's really important about this chart, and I'm going to point out a few things that's happening in the currency market, which may influence what will happen in other currencies. And let's just start here and identify that the euro actually posted a false breakout. Now, what's so important about the euro posting a false breakout there is that is the 38% retracement of the 2021 highs to this year's lows. Now, when you get a 38% retracement, that usually doesn't bode well for, in this case, the bulls, because a 38% retracement is a good indication of a continuation pattern in the predominant trends. So if we do end up being a failure here at the 38% retracement and we do not surpass last week's highs, that's going to be very problematic for the bullish case. Now, I'm going to tell you personally, I think that the dollar is carving out a longer term high, but there's a lot of risk going into next year. What are the major risks going into next year? Well, there's a few of them. First of all, we're probably headed into a global recession. And the global recession, and I'm sure a lot of you would agree with me, looks like it could be rather intense. And if it is, and it's prolonged, it could weigh on stocks and weigh on the economy. Therefore, there will be that continuous rush into the dollar. which would, argue the case that the euro might be indeed heading back down towards parity, maybe even lower. Also, you have geopolitical risks. I don't think Russia and the Ukraine in that situation has gone away, nor has China and Taiwan. Those are all risks going into next year. And if you put both of them together, the dollar might actually surpass its previous highs. But what we're faced with right now is this week, the euro did fail at the 38% retracement. And as you can see right here, it did give us a false breakout. So, that is important, number one. But it's not just the euro. Take a look at the sterling or the cable. The cable had a failure above these recent highs after a very strong V bottom. And that does argue that this low, the all-time low that we had in the sterling, that's probably going to hold. But that doesn't mean that we can't break through the 200-day moving average after having a false breakout and make a move back down, towards the, 110, 112 level before finding some sort of bottom, early next year. That is possible, and that is a risk. But it's not just the euro. It's not just the sterling. Let's take a look at the Aussie dollar. The Aussie dollar had a failure at the 200-day moving average and broke through channel support and closed below channel support this week. Okay? It's not just the euro. It's not just the sterling. It's not just the Aussie. Let's take a look at the dollar Canadian. The dollar Canadian came out of a triangle pattern 2 weeks ago, and we talked about it. We talked about it on the week ahead video last week. And that should support the dollar Canadian. It did. And even a retest of the triangle held. Now we're approaching this 618 retracement, key Fibonacci level at 137. We basically closed there. If we break above that going into next week, we could very easily be trading back into 140. So it's not just the euro. It's not just the sterling. It's not just the Aussie. I mean, there's a lot of different currencies that this dollar bullishness is developing. Now, if you look at the dollar yen tends to sing to its own tune, and we did complete in what you would call an AB equals CD movement here, right? That's what you see completed here. The problem is next week we have the Bank of Japan that is meeting. There's a Reuters story over the weekend that suggests, let me read the headline to you. Japan to revise statement with central bank to water down price target, Kyoto reports. That's an article that came out in Reuters on Saturday. So what does that mean to you? Well, that means that as Kuroda is wrapping up his tenure over at the Bank of Japan, there is going to be a new central bank governor coming in, and perhaps they might have a slightly different policy moving forward. That could weigh on the yen, not just the dollar yen, but also other yen pairs as well. So that's something that you as a Forex trader should pay attention to. And if the dollar yen breaks through this 200-day moving average, you might say, well, hey, the dollar is breaking down, but it might actually be yen pairs that break down. So, try to put the dollar yen in its own bucket when you're talking about dollar pairs, at least for right now, especially if it ends up not being a yield story and it's more of a Bank of Japan and yen, Bank of Japan yen story versus a dollar and yield story. And remember, the Bank of Japan does meet Monday night, late night here in North America, but Tuesday morning in Japan. Now, if you put all of this together, it doesn't paint a rosy picture for the S&P. And that's the point that I'm trying to make here today, is that the dollar looks like it's about ready to reverse and strengthen. But if you look at the S&P, we had a very, very nasty close for the week. Not only did we respect the bearish channel, the bear market trend, the 200-day moving average, the potential double top. And if you're watching the cash market, the S&P actually did a false breakout up here above 4,100. So not only do we have all of that weighing on the market, we also broke through support by the end of the week, and we closed at the lows of the week. Now, I know what you're thinking. You're thinking, boy, Blake, the dollar looks extremely bullish here, and it looks like we're reversing. And, here's the dollar index, and you see that golden fib level, the 161% extension of the last major move higher into new trend highs, right? That's 161% extension right there. But notice how relative strength, You can see it down below. You notice how we've broken out in relative strength. It does suggest that the dollar looks like we could, rally back above the 200-day moving average in the days ahead. And I know what you're thinking. With the dollar strengthening, stocks are weakening. What else is there to do? But just sell stocks. Well, before I tell you my outlook of the S&P and talk a little bit about the seasonals, I need to mention the sponsor of today's show. The sponsor of today's show is the Trader Funding Program. So if you haven't checked out the Trader Funding Program, and if you really want to get yourself a great gift this year, watch the 2-minute video. If you want to learn how to trade our money and not risk your own money and keep 75% of the returns, then learn about the Trader Funding Program and learn about taking an assessment. The assessment is a one-time fee, but included with your assessment is A, an unlimited time to pass, but B, you get to be included in the Forex analytics community, so you can be inside of our trades room and you can see what trades I'm taking. You can see what trades other traders are taking, and what our whole team participates in here in this chat room. So take advantage of the Trader Funding Program. There's a link in the description down below. Click on it, watch the 2-minute video, and then get yourself a good holiday gift, because I know you're out there shopping for everybody else as well. Get something for yourself. All right, back to the analysis. So, like I said, if you put it all together and you start thinking about the picture I'm painting in the markets, it does seem a little scary, and it seems a little scary for the stock market that the dollar index might continue to reverse. But I don't want to dismiss the strong seasonal aspect of the last couple of weeks of the year. Let's talk about it for a moment. The stock market is down, if you go from the beginning of the year, which is basically the top, the stock market is down about 20% on the year. Most asset managers, pension funds, hedge funds are underperforming. They're underperforming for one major reason. Your typical split between equities and bonds, that typical mix that investors have been using for decades on end, it hasn't worked this year. And so when you see the stock market that has dropped like you see it here, and you look at the bond market and realize that the bond market has been really under pressure all year as well, then that tells you that most institutions are probably underperforming, the major market indices. So you have to take that into account going into the last couple of months or last couple of weeks of the year. I do imagine that initially this week, because the way the technicals look, the way that everything closed at the end of the week, we're probably going to see a little bit of downside pressure to start off the week. However, I wouldn't be surprised if we found some sort of support at the 50% retracement, which is around 3,800, maybe a little bit lower at horizontal support, and also the 618 retracement around 3,725. We might find some support in the S&P because liquidity is going to get poor the longer this week goes on. And then the week between Christmas and New Year's, there's not going to be a lot of liquidity. So I wouldn't be surprised if markets find some sort of bottom this next week and start grinding higher. Anyway, will I be right? I don't know. But I'm preparing for that potential going into next week. Because me personally, I'm long the dollar, but I don't know if I really want to stay long the dollar much more than sometime next week. There's a lot of key data coming out this next week that we should be aware of, that you should be looking at on the calendar here on Forex Analytics or whatever economic calendar that you follow. Pay attention to a few things. We have the BOJ on Monday night or Tuesday morning if you're in Japan. We have Canadian retail sales on Tuesday. We have Canadian inflation data on Wednesday, and that could really influence this dollar CAD, especially if that inflation data comes in weaker than expected, which most markets most Most economists are expecting month-over-month CPI data to come in a little weaker. So that's important. And if you think the rest of your week is finished, it might be finished for you because you're hanging out with family or friends, but be careful of any open positions because we also have final GDP in the US on Thursday. And most importantly, on Friday, I know it's on Friday, it's not Christmas Eve, it's the eve before Christmas Eve. We have Canadian GDP, but more importantly, core PCE and PCE data, which is one of the Fed's primary inflation gauges, will be released Friday, December 23rd. So there's a lot happening next week, and I want to end it on this one sentence that liquidity is going to be poor. So make sure you manage your risk appropriately and your position sizing appropriately. Because if volatility is a little higher than normal, you got to trade in a smaller position so you don't risk as much, and you can sustain some volatility in the markets. And don't let those bad trades get away from you. Manage your risk. It's so important. You don't want to give back all these gains that you've made in 2022, all in the last couple of weeks of the year. And guys and gals, I want to say it's been my absolute pleasure having you with me all of this year. I hope you all sincerely have a Merry Christmas, Happy Holidays if you don't celebrate Christmas, and I'll see you back in 2 weeks on the Week Ahead video. However, on the free F.A.C.E show, guess what? I'll see you on Monday morning along with the Forex Analytics team. So have a great remainder of your weekend, and I'll catch you then. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.